Well, thank you for joining us today. There has been a lot going on in the media because of the election. We're going to spend some time today talking about the tax implications of what that all means. Welcome back. We're going to be focusing today on what we do know as a result of these elections. There's a lot we don't know, which is pretty consistent with the rest of 2020 has been, in that we don't have absolute crystal clear guidance that we can give you, but we do have a pretty good visibility into what this election does and what does it mean. So we're sitting here today and it looks like Biden is going to win. We don't know for sure, but we're going to assume that for purposes of the discussion, Biden is probably the president. We don't know where the Senate is going to be, whether it's going to be majority of Republicans or whether it's going to be close 50-50. What we do know is that it's going to be close. And so the purpose of the assumption through this video is based on that. It may change. But what we do know right now is that we're not going to know before the end of the year. So the information we have today is pretty close to what it's going to be between now and December 31st. And we have to make actions or not make actions based on this. So that's what we're going to spend time today talking about, are some of the things that you need to do before or after year end. So what you're going to hear from us today, and the takeaway, is that the media, surprisingly, has hyped up a lot of what the implications of this election are on taxes. And admittedly so have I as a tax preparer and many others as well. You're reading articles about the tax implications. They've talked about tax policy. But as the dust starts settling here, what we're observing is there are differences and there are going to be implications, but they're not as critical for the masses as what people may think. And so if you're going to have a takeaway here, the vast majority of individuals aren't going to have a fire sale between now and the end of the year. That it's okay to have a methodical, thought-out plan, but you don't need to run and do a ton of things, which is very different than what you may be hearing elsewhere. So the indecision is a decision here within this tax consequences. So it's hard to explain that at first, but it takes a little bit to set in, especially with the media and the way they've pushed it. But it is important to hear. And specifically within that, the numbers you need to know are $400,000 and $1 million. So when I say that, Rick, what are we hearing here when I say the $400,000 and $1 million? Why is that so critical?
Well, in Biden's plan, which is this is all proposed. There's nothing on his website that has details for us as tax professionals to dig into and say this is the way it's going to be. This is still our best educated guess. So the $400,000, Biden has made a promise that your taxes will not be raised if you make less than $400,000. So that, and for the most part, everything that we've analyzed here, that holds true. It's if you make less than $400,000, then your taxes are probably not going up. However, if you make more than $400,000, then yes, there's going to be some impacts that we're going to talk about today. And then there's also this $1 million threshold. If your income is over $1 million, there's an additional tax that will be instituted that could have a major impact as well.
Yeah, so thanks, Rick. And on that, the takeaway is if you make less than $400,000, that you will likely have lower taxes or the same as. And so that doesn't mean that we don't need to do tax planning. That doesn't mean there's not things that we need to be thinking about. But what it means is it's going to be more of a methodical approach to how we handle it. And it's going to be things on tax planning that are going to be more normal year-end planning or more truly related to your individual instance and circumstance. Not because Biden won or Trump won or the Senate is Democrat or Republican. What we're seeing is that if you make less than $400,000, it comes back to other facts and circumstances, not necessarily because of the specific tax, what will change or won't change in the future. If you make more than $400,000, you absolutely need to hear that we need to be talking. We need to be assessing what we're going to do now versus later. That doesn't mean we're going to go do everything now, but it does mean that if you make more than 400, we need to be talking. We need to be doing a specific tax plan for you. We need to be deciding what should or shouldn't be doing before now and at the end of the year.
And just one key point too, John, you had mentioned that we think we know everything as of, there's nothing that's going to change before December 31st, as far as we know. Even additional time, the time we have is that there's never been a retroactive tax bill. Well, one time, I'm sorry. 1993, there was a tax bill passed by President Clinton in August of 1993 that the tax rates were retroactive to the beginning of the year. But that's happened once in our history. So if you look at the time frame here, Biden gets into office in 2021. It takes time to get the legislation passed. So it's most likely these changes we're talking about aren't going to hit our clients until 2022, January of 2022. So we have time to plan, we think. Again, we don't know for sure, but we think we have time to plan.
Yeah, we think. And then I want to reiterate here something that as we look at trying to make the best decisions today, given what we do and we don't know, if we were going to summarize or make assumptions on this, if there's going to be a major tax overhaul, it's likely not going to be retroactive. So it likely wouldn't impact until 2022. Mm-hmm. If it's going to be more of a toned down average, which may be where it ends up being because the Senate is so close, it's not going to be probably this gigantic, huge overhaul. It may be retroactively, but if it is retroactive to the beginning of 2021, it's because it wasn't as big, and therefore you didn't have to jump to major conclusions this year. So there is time. That's what you need to hear. There is time on what we need to do. Again, if you make less than 400,000, if you make more than 400,000, you need to be talking and thinking about it. I do want to take a moment here to acknowledge the elephant in the room, if you will, which is that we're not saying that we don't feel taxes are going to go up. Many people think they are. Republican, Democrat, independent, conservative, wherever your political affiliations lie, it's very common feeling that taxes are going to go up. But what you need to hear from us is that it may not impact as many people as you think it would, meaning the lowest hanging fruit that are coming through, that are being seen, both the Republican and the Democratic tax plan, is actually foreign transactions. It's the Googles or the foreign companies that are doing business inside of other countries that are going to be impacted. I say that like it's absolute. It's not. But what I'm sharing here is that we're acknowledging that taxes are likely going to go up, but it's going to be in an indirect method to most of the people that I'm talking to here, which is it's going to come via increased product costs or going to come by other areas. So the taxes are going to happen. It's just not necessarily as directly to the average middle class individual. Rick, you had a statistic that you were talking about that you had.
Right. So the Tax Foundation, it's a nonpartisan, nonprofit organization, and there are several out there that we looked at for sites, but based on the Biden tax plan, it's generally going to be a 1.7% decline in after-tax income for the average U.S. taxpayer. 1.7% decline. So if you were to say if 1.7% is probably not going to impact my lifestyle, maybe that's how we need to look at this. This is not a fire drill. There's no big cliff that we need to jump off of because of such and such a tax coming in. 1.7% is not the end of the world.
Right. And where that's probably going to come through is not even on income taxes. Rather, it might be increase in cost of the washer or dryer that you bought because there was an increased tariff or others, that it may not come through income taxes. It may, but it most likely will not. So, can we spend a little bit of time talking about some of the items that if you're over 400,000 that might be coming through and then we got to just topically think about?
Right. That's a good time. Well, one of the big things you've heard about is Biden wants to raise the top marginal tax rate to 39.6% for those making more than $400,000. Again, we have a graduated tax system. So if you make more than $400,000, doesn't mean you're going to now pay at 39.6% on everything. It's just anything above $400,000 gets taxed at that 39.6% rate. And the rest of your income previous to that is under the old system, under the old tax rates. And as far as we know, the $400,000, all that's been announced is that's whether it's married, filing joint, or single, or head of household, it doesn't matter. All it says is over $400,000.
And that's why we keep hitting this $400,000 mark, because of that graduated rate, that if you're under that, you need to be doing tax planning, you need to be thinking, but you need to be thinking about it for other reasons, not because of a Biden or a Trump or a senator or a Democrat or a senator of the House. It's related to effective use of tax rates, which would be normal tax planning that we would be doing any other given year. And don't worry, we'll have other videos that kind of go into those details and other topics. But as it relates for a result of the election, the 400 is the key item that you need to be hearing.
Another thing that people over 400,000 of income would be hit with is a 12.4% Social Security tax. So that would be split evenly between you and your employer, so 6.2%. So once you get back up to let me back up that right now Social Security stops being withheld if you make more than $137,000. Well, under the Biden plan, you'll have this, they call it a donut hole. They're referring to it as a donut hole, that between 137 and 400,000, you won't pay any additional Social Security tax. But then it'll kick back in again. That 6.2% will kick back in again at $400,000. Again, that could have a major impact on, you take the 6.2% and then the 39.6% over 400, that's a major impact.
Yep. And again, I'm going to kind of circle back and say what we are seeing, both Republican and Democrat, is what I'm calling as simplification through complication. So there are very complicated tax laws that are out there that are coming through, but they're aiming and hitting a very select few, either the large businesses or the high earners. They're trying to change tax policies to make the masses of America, the large percentage, is simpler. And so most individuals out there, if you're making less than $400,000, you don't need to worry as much. If you're making more, you need to worry. And so that's what we're trying to hit, and you can hear from us, is that's that threshold you need to really be focusing on right now.
And let's talk about another complication for those higher income earners at $1 million. We'd referred to them at $1 million, there's another tax to be concerned with, and that is the Biden plan would tax capital gains on those making of income of more than $1 million. Capital gains would now be taxed at ordinary tax rates. What does that mean? Currently, if you're at $1 million and you have a capital gain, you're going to max out at 20% plus a 3.8% net investment income tax. Generally applies to most people. So that's 23.8%. Under the Biden plan, that 23.8% becomes 43.4% if your income is over $1 million. Major implications there.
Major implications. And I would imagine that many of you heard $1 million of capital gain and probably tuned out, because most individuals wouldn't think, oh, I make $1 million or more. What you do need to hear is that it's going to impact more people than you think, because it's going to relate to maybe when you sell your business, or you sell a major capital asset, or you sell a residence that you've had for many, many years, and there's certain exclusions there. What you need to hear there is that it may not impact you most of your life, but there are instances where it will. And so even if you are kind of tuned out on the over $1 million, which in general you probably will be, you got to know behind the scenes that there are certain events that you are absolutely going to have to plan for. So whether you're selling the farm, selling your business, it's going to have differences now that are going to probably be different the way we handle it now than we ever have in the past.
One other thing, this actually would impact all income levels, is the elimination of stepped-up basis on transfers of property at death. So the example is maybe you inherit your parents' house and it's worth $500,000, but they paid $100,000 for it. So there's a $400,000 increase in the value of that home, and then you inherit that $500,000. Under today's system, you get what's called stepped up basis, and you don't pay tax on that gain. You get the $500,000, it's basically tax free. What would happen under the Biden plan is, and I got to go back, the details are really sketchy on this one. We don't have details, but generally they're talking about a capital gains tax at death. So your parents' estate would pay tax on that $400,000 capital gain, but they also would have sold their house for $500,000. There is money there to be paid towards tax.
Yep. So again, what you saw there was a very complicated scenario that we dove into the details with that doesn't happen on a regular basis. And again, in the context of this video, where we're talking about things that have to happen as a result of the election before year end, I don't think you're going to go out and sell grandma's house because of the election or because of year end. It's going to happen anyway. And so that's, again, the theme that we continue to see. And as we've dove into some of these details here is for the vast majority of individuals and the vast majority of circumstances, it's not going to change how we're going to react between now and the end of the year. Because even that what you were just referring to there, it's just a discussion item on a website of a potential thought or a consideration. The Republicans talked about it. The Democrats talked about it. So what you need to hear is it's on the table for both Democrat and Republican. It's probably going to come in. Now, it's still so early to even spend too much time on it. But what you need to hear is you're going to hear more about it in the coming months and years. Not today, but down the road.
And I would say the last potential tax increase to talk about would be the decrease in the estate tax exemption down to $5 million, which this is the pre-2018 levels, down to about $5 million.
Yep. And we're bringing these up here today because, again, I would surmise that that's going to happen probably between whether a Republican or a Democratic House or Senate come through. They're both talking about it, so these are things that we need to be planning for. But again, we just mentioned going from $11.5 million down to a $5 million estate. So the vast majority of individuals, this is not going to impact. It will, if it does, you know it, we need to be talking, but for the vast majorities, it's not going to make a big difference. And then to really circle back, what we do see is the average American below $400,000 is probably going to see a pickup in income, or a pickup in decrease in taxes, I guess. So a pickup in credits. A good example of that would be they've talked about having an increase in the child tax credit. Well, I don't think I would tell you to go and have a child between now and the end of the year just to get the potential tax increase. So what's going to happen is it's going to be things that happen anyway. It's more tax policy than it is tax-motivated stimulus or decisions.
Right. There are several credits in there. There's a first-time home buyer's credit. There's expanding the child independent care credit massively. So anybody under $400,000, I can see some good opportunities that they're going to reduce their tax.
And we're going to talk to you more about those in the future, and whether it's in person or in videos. But for planning, for purposes of planning, we don't see having any major ramifications. I'm going to end with probably the largest item that I am getting questions on and hearing on is those that receive the PPP loan. And now that we know the results of the election, do I ask for forgiveness? Do I not? And my answer to that is I don't know, which is the same as it was before and the same as it was after. What I would tell you is it doesn't make a difference now whether Trump or Biden wins, whether the House or the Senate or where those results are. Where it comes to is what are your facts, individual facts and circumstances for your business. So did you have an up year or a down year, and do we need to be thinking about it? So you absolutely need to be doing tax planning on that, not as a result of the election, but as a result of just normal tax planning. So we should be talking about these things, but what you need to hear is don't necessarily assume that you have to go and make gigantic rash decisions. Because that's what the media would let you believe right now, that because Trump didn't win or because the Senate may or may not have majority or not majority, that we have to rush out and make major moves. There are certain individuals that may, but by and large, most individuals are not going to have to make large, major decisions.
No fire drill. This tax legislation is usually not retroactive. So Yeah, you got it.
So tax plan is important, but don't go do anything rash. Thank you for joining us. Look forward to talking to you in the future.